Hey guys, how's it going? It's Andy from Magoo Investing. Happy Tuesday. Hopefully you guys can't hear it, but it sounds like every bird in the Portland area is squawking right outside my apartment right now. So hopefully you guys cannot hear that. But I was finally able to go get a haircut this past weekend, so now hopefully I won't have to be wearing any hats in future videos. And I'm kind of surprised because the past couple of times that I've worn hats on this channel, I got some hate messages of people saying that it was unfitting for someone talking about the stock market to wear a hat. Really confused me. But thank you guys for not flaming me for that. But when I think about the stock market YouTube channels, I think about a couple different types of videos. You have the channels that are talking about different strategies for how they make money. This is maybe explain how they swing trade or how they do technical analysis. And then you have the channels that just talk about recent stock market news and how stocks have been moving overall. But one of the topics that are involved with investing in the stock market that I don't think gets enough attention and should be talked about more has to do with emotions. Because I think emotions are the hardest thing to control when it comes to investing in the overall stock market. And yes, we've had a couple volatile days in the past month. I can think of a couple instances of the NASDAQ falling 3% in a single day, which is a pretty big move. But for the most part, the stock market has been going up consistently for the past year. Here's what the one-year chart looks like for the NASDAQ, and the fact that it's up almost 90%, I am still pretty impressed that the stock market has been able to retain onto its value. But what everyone's been saying is it's not going to last forever. We don't know when it's going to fall, but eventually the stock market's going to fall and emotions are going to come into play because right now, when everything's going well, you look like a genius no matter what you're doing. You could be playing the most risky stock in the world, but if the stock market's going up, it's likely going to be pulled up with it. So today I want to be talking about stock market emotion because I will say that I was addicted to the stock market. It took me a long time to actually realize that this was the case, but in today's video, I'm going to be talking about my experience realizing that I was addicted to the stock market, kind of explain my experience there. Then I'm going to be talking about what changed for me to not have this much of an emotional dependency on the overall stock market and some of the changes that I made in my investing strategy. And then in part 3, I'm going to finish the video talking about why I'm slightly worried for new investors because there were a lot of people getting involved in the stock market for the first time in the past year, especially with the pandemic making it so that investing became a very popular place to learn about. And obviously that's fantastic because the more people that get involved in the stock market, the better, because that's literally the whole goal of this channel is to try to educate the newer investors. But I am a little worried about them for the long term. So when I've told people in the past that I was addicted to the stock market, I usually get a little chuckle out of people because they think that I'm joking. But I always talk about how there's a million different ways to invest in the stock market. You can be the really reliable investor. You can buy just mutual funds and not have to worry about anything. Then you can go slightly more risky, get involved in swing trading and day trading. And the closer you get towards that day trading aspect of it, it can be treated more like gambling. I definitely got the same type of reaction from day trading and swing trading that I would if I was gambling. I never thought I really had an addictive personality until I stopped day trading. And then I looked back at myself and I was like, ooh, I really did not like the type of person I'd become during that. So I wanted to kind of explain what was going on because when I started investing in the stock market, I started pretty conservatively. I bought some of my favorite stocks. I bought into companies like Roku and PayPal, companies that I still love to this day. But then I started getting into the deeper parts of the investing community on YouTube, and I found some day trading communities, and I was really cocky. This is when the stock market was going up pretty consistently during the summer of 2018. And I was like, oh, I'm getting really good at this. So then I started putting more and more money in, and I started just pretty much only day trading at that point. And it seemed really smart at that time. And then I started getting involved with leverage ETFs. A leverage ETF follows some sort of underlying stock sector, or maybe an indice, and it's multiplied the returns by 2 or 3, and I was using 3 times leverage ETF. So if the NASDAQ went up 1%, I would be up 3%. The problem is, if you've paid attention to the stock market for the past couple years, the summer of 2018 going into 2019 was a very volatile time, and we had some very crazy moves of the overall stock market. Within the span of just a couple months, we had some very close calls to ending the longest bull market in the history of the stock market. This is when we had a lot of tariff problems, and that was really freaking out the overall stock market because the companies that have done very well in the past year with the tech stocks are very reliant on the Chinese markets to succeed. So we had a lot of volatility during that time, and the stock market would fluctuate pretty aggressively during that time. And if you're playing a leverage ETF, there were 5% moves where I was on the wrong side of the 5% and I was down 15% in a single day. And during that time, I was working at a golf course. And what this meant was that I was up before the market actually opened, and I had a little bit of flexibility because I was working on the grounds team. So I was kind of out by myself for most of the day, and it allowed me to check the stock market pretty much as frequently as I wanted to. And it got to the point where I would be checking it just constantly. I could have looked at it just a couple of minutes ago, and I wanted to open my phone so bad just to see what's been happening with the overall market because I would get a rush every time my stocks would go up. But it got to the point where it was the only thing I could think about. And it really impacted my relationships and just how I was going through my everyday life because the stock market was pretty much who I was at that point. If the stock market was going well during that day and I was making money, I was in a great mood. And if I wasn't, I was just kind of grumpy the entire day. And it got to the point where one of my roommates was like, yeah, I can tell how the stock market has been doing based off of how you react by the time I get up for my 9 o'clock class. And I really did not like that as being my personality trait. Who I was so dependent on the overall stock market. And I just thought that was such a poor way for me to live my life. And that was kind of the realization that I needed to kind of tone back what I was doing. Also, it helps that I blew up my portfolio at that point, and I was down like 75%. So put those together with the fact that I understood that I was actually addicted to the stock market and day trading, and the fact that I blew up my portfolio was a good reason for me to kind of take a step back and reassess how I wanted to be involved in the overall stock market. And so after I blew up my portfolio, I took some time and did some more research about investing in the overall stock market. And it helped because I had a little bit of an investing background because I grew up around my dad being with the stock market my entire life. It's also his birthday, so if you're still watching this video, say happy birthday to my dad in the comment section down below. But I had this kind of background of investing in the stock market, so I had a pretty good understanding of how the market worked overall. And that was the inspiration for getting involved with this YouTube channel, because I had fallen into a trap that I'm sure many other people have, is by following these massive YouTubers who talk about day trading with $100,000 and how, they make $1,000 a day. That seems fantastic when you're getting involved with the stock market. And especially if things go well from the beginning, you can get very greedy very quickly. And that's exactly what happened to me. And just like gambling, it got to the point where if your strategy is not sound and you're not winning more than 50%, in the long run, you're going to lose money, just like gambling. And that's kind of how it was. The longer it went on, the more money I was losing overall, just because my strategy was not sound. I had a very emotional response to investing in the stock market. And my problem is I cut my winners too short and I let my losers run, which is the exact opposite of what you want to be doing. But I do think that that's the best thing that could have happened to me in the overall stock market. And as weird as it sounds, I think losing money early on is the most important lesson that you can learn from the overall stock market. Because yes, I messed up really bad. I blew up 75% of my account. But the fact that I did it early enough where I lost $750, which at the time for a college student was devastating because, the stereotypes about not having money in college are true, but $750 over the course of a lifetime is not that much. And it really got me out of my bad habits early, because I think if I had had some success at the beginning and the stock market continued to go up and say I doubled my money within a couple months, I would have put as much money as I could into the overall stock market. And instead of losing $750, I could have lost like $5,000. And so I think losing money early on really humbles you, because when things are going well, you look like a genius because the overall stock market's going up and you're just riding the wave. But I was getting involved during a pretty volatile time, and it was very easy to lose money very quickly. And so one of the first things that I learned from this is I took a step back and I really needed to work on my position sizing. And if you've been involved on this channel for a couple months, you'll know that when I take new positions, I usually refer to them as feeler positions. These are positions that are relatively small because I don't usually have the best entry point, but I do want to be involved with the company. Back in my day trading days, 100% of my portfolio was being involved with leverage ETFs. This meant that I had days where I was down 10 to 15%, but I also had days where I was up 10 to 15%. And for volatility, that's a really emotional time. So position sizing was a really important thing for me to learn. And now I think I have 11 total positions, and that gives me enough protection for the volatility of the overall market. I don't own just one company. I own companies in a good variety of sectors. I am very tech heavy just because, I'm 24. That's kind of the sector that I understand the most. But I have way more protection compared to the day trading days where 100% of my portfolio was in leverage ETFs. So position sizing was the first thing that I really learned when I took a step back. And the other one was that I need to pick less volatile stocks. I was so worried about how my portfolio was doing at any given time during the day because I would just want to see how my portfolio was fluctuating over time. Now I've gotten to the point where I'm relaxed enough with the overall movement of the stock market that I don't check my portfolio every day, which is kind of weird considering I make stock market videos pretty consistently. But at this point, the only stock that I check on a regular basis is General Electric stock, ticker symbol GE. And that's because I do have an options position that is very close to being in the money. And so I'm kind of watching that to see if that gets assigned to me this upcoming Friday. But for the most part, I think it's a great place to be where you're not worried about how your portfolio is doing on any given day. You just kind of check on it every once in a while, make sure that everything's going well. But the obsessively checking my phone was so bad for me, and it made me so anxious, just kind of waiting to see how my portfolio is done in, the 5 minutes that I haven't checked it. And so watching it go up and down, that's one of the things I don't like about TD Ameritrade is that it doesn't show your portfolio value over time, whereas on Robinhood, you can go in and see how that valuation fluctuates the entirety of the day. And I thought that was a good thing at the beginning. But now that I've kind of taken a step back, I think that profit and loss chart kind of promotes gambling. That's just my personal opinion. I'm curious to see what you guys have to say about it. But I wanted to finish this video talking about why I'm slightly worried for newer investors, because I think I learned how to invest at like the perfect time. I started getting involved when things were going well. I learned a bit about, how to pick stocks and how the more volatile stocks are going to gain more than some of the blue chip stocks. But I also got involved during a very volatile time where we had 5% moves were pretty regular over that summer. But now we've come to a very interesting time in the overall stock market. Yes, we did have the pandemic crash, but most people of the new investors, which is probably the largest flux of new investors of the stock market that we've ever seen, most of them didn't get involved until the crash had already happened. We've had the NASDAQ that's up almost 90% in the past year. And I'm worried that people are going to get too cocky overall. And I think that the longer that the bull market continues and the longer that we just keep seeing the stock market increase in value, I think people are going to get riskier and riskier, because you really don't know any better until you have a big loss, because it really takes that emotional response to kind of realize, oh, I was doing something really stupid. And so I'm kind of worried about that for newer investors. And it's going to be really interesting to see how people deal with the emotions of it, because when I was involved with day trading and swing trading, one of the common things that I heard was you want to try to trade like a robot, because emotional response to money is a very common thing. And if you can get rid of that response, you're going to be a much better trader overall, because in theory, that's going to make you a better trader. I just don't think that that's the best way to go about it. An emotional response to money is natural, and I think trying to deny that it's a thing or try to remove it entirely is completely unrealistic. I've tried doing that. I wanted to be a robot. I couldn't do it. And I think most people will have similar responses. And so while the stock market's going up, everyone's having a great time. But I'm worried that the newer investors are getting too risky positions, and if the stock market does fall further, that they're going to have a really tough time and maybe they don't come back from it. And so that's what I'm worried about overall. I'm very curious to see if you guys have had similar responses to being kind of quote unquote addicted to the stock market, where you're obsessively checking to see how the market's doing every couple of minutes to see how your portfolio has changed during that time. Because during the time I thought I was just really into the stock market. And now that it's been a couple of years and I've taken a step back and now I have a more conservative portfolio, I could see how bad of a problem I had. And I'm very happy that I'm past that now. And so losing money sounds horrible at the beginning, but I think it's an important lesson to learn. And I'm very curious to see if you guys have been around long enough where you've seen the market fall, maybe if you're involved before the pandemic. But I'm very curious to see what you guys have to say about the emotions of the stock market. Thanks for watching. This was just kind of a brain dump. I just wanted to talk about this topic because I don't see it discussed a lot on YouTube. It's a lot about, oh, this is the top stock to buy right now, when emotions are a very important part about investing in the stock market. So thanks for watching. I appreciate all support, and I will see you in the next video.